What's up, guys? It is Sam here, and I wanted to do an update video on yesterday's $150 negative portfolio value gain in the last week. So, with that being said, let's get into it. Don't forget to subscribe and press that thumbs up button. So, I started trading. Well, actually, let's start at the very beginning. I remember being in the senior year of college, learning about options, and I thought they were fascinating. I just thought they were super interesting at that point. And I was just very, very intrigued by them and the possibilities, right? I can actually view these videos that I'm posting online as call options that I'm purchasing for a very low cost, right? If you think about this content, right? Like, I'll post these videos because it's fun, it's interesting to me. I love interacting with people and the people reaching out on Instagram or in the comments. By the way, you can leave comments down below, and I will get back to you eventually. Generally, it's within a day or two. If you get out to Instagram, it's a lot faster though, because I use that a lot more, at least from the comment. I don't feel like there's a great way to respond to comments on mobile for YouTube. But anyways, with options, I just thought they were super fascinating, and I learned a lot more about them in graduate school and through the CFA and through the CAIA and through the CMT, and how they are traded and just what was super interesting to me. And that portion of it was just intriguing to me. So I started trading with a demo account with the TD Ameritrade Thinkorswim platform. And I think that was in probably mid 2017 to late 2000, or no, that was in early 2017, I think it was. And so 2 years ago, roughly. And they start you out with a demo account, and it's 50 grand in there. And I would trade options in Tesla and SPY, and within a very short period of time, I doubled the value in the account to $100,000. And this was around 90 days. I think it was a little bit less than 90 days. But I didn't understand how that was possible. To go from never, like, yes, I was been super intrigued, and yes, I learned how to like actually price and model out the pricing of an option, and learned about all of that stuff and the details of it, and just all the different Greeks and how to calculate each one of them, and the actual statistics behind all that, to do all that in terms of if you wanted to create a model to actually price. Like, I could create a model in a spreadsheet with inputs that would come up with virtually the same price that you would see in the market, where you could back out the implied volatility and just like all this stuff. So I thought it was interesting, but I didn't understand how I could jump into something like that and start making, you know what I mean? It's a demo account, right? So you'd be like, yeah, Sam, anybody can do that with the fucking demo account. But just hear me out. Like, I didn't understand how it could be so, like, how is it so simple that I could do something like that? How is it so easy that I could just take that demo account and double it? And I was in a different spot mentally at that point, and financially, and I never put money into it, and then I stopped, and I was like, yeah, at some point I would like to actually start trading, and put my money into it, right? And then 2 weeks ago, I decided to start with I can tell you exactly what it was right here in front of me. I started with $1,444.85. So about $1,500. That was on the 10th of the month. So what is that? 16 days ago. And then on the 13th, I added 800 more. And then on the 20th, I added $1,000 more. And now it's the 26th. And the return so far is $351 that I've made. And that's my money. It's not a demo account. It's not fake. It's my money. I've contributed $3,287 to Robinhood total. And it's pretty interesting. Just based on the amount from when I started, and then to calculate the return on there, you take out those other two pieces, because I'm just going to do that for the month. So meaning started with $1,444.85, and the current value is $35.96 and 54 cents. However, I contributed capital twice, right? So you have to take those out of the equation. I'm not going to do a time weighted return, but I'm just going to take those out of the equation so that I get to see what my return is over this past 2 weeks, roughly. And it's 24%. So I'm not claiming to be anything special. I'm not claiming to like even have any idea what the fuck I'm doing, right? But it seems relatively simple. Yesterday I was down $151, and I looked at it as like an opportunity, because you see that when things are down like that, you can get into more positions because people are scared or whatnot, right? Like everybody trades for a different reason. So some people are in for a certain reason, other people are not. But $351 in 2 weeks. I don't know. It's not that. That's not that much money, right? Like it's not that much money, but it is. It is interesting, and I'm going to continue with this. I will continue posting these videos. I'll tell you all the positions. So first of all, I'm going to give you all the information about the positions that I do have open currently. Okay, and then I'll dive into one of them, okay? If you guys have any questions, let me know down below in the comments. All right, so let's take a look here. What I have here is a put credit spread on the SPY, expiration for 3/27, 275.50 to 274. So what that means is the SPY is a ETF on the SP 500, which are the 500 biggest companies in the United States. By the way, something might be interesting. The way index values are calculated has a effect on the performance of the index. Just a little tidbit there. You can use at cocktail parties. Next time you like, when you're going to talk to a girl, you can just slide right up to her and be like, "Hey, honey, how you doing? Did you know that the way they calculate index values actually has an effect on the return?" And she'll probably just like look at you dumbfounded and then take her panties off. Just saying, you should try it. Sounds like a good idea to me. Pantyless. I'm just saying you should try it. Before you knock it and give me a hard time and unsubscribe, you should try it first. And by the way, that's the truth. They're calculated in different ways. Okay, so I can get into more detail on that if you want to at some point. I've got some textbooks over here that explain that. Anyways, okay, so that's the first position. So you have two legs, right? So this would be, I would say it's one position, but it's composed of two parts. And then remember how I said it was the SPY 275.50 to 274. So each expiration is a separate contract, options contract, but together they make up one position. And when you do this, you open them up at the same time. Because if you were to open them up separately, or they were to be considered separately, you'd have to have like margin requirements, and I wouldn't be able to trade with a $3,500 account value. So you have to limit your risk, because you have to be able to cover your positions. So that's the first position. And that's selling one that's closer to the money and purchasing one that's further away from the money. And SPY has 3 expiration dates per week. Like, that's liquid as fuck. So sometimes you get into a position you can't get out of it because there's no, like, try trading like, some other company, like fucking Bed Bath & Beyond or something like that. You know what I mean? Just one that where, I don't know, I don't even know of another one because I try to look at ones that are very liquid. Anyways, Tesla is the next position. That is expiration on 3/29. That's a 240-250 to a 230-250. It's another credit put spread. So if it's a credit put spread, credit means I get money. So that means I sold it. But it's like you sell the one that's closer to the money and you purchase this one, right? But this might be $200, this might be $100. So I sold this for $200 and I purchased this for $100. So that delta is the credit I get. Delta is just the change in something. So the delta in that is what I received. That's the credit. Now, if it was if you had a debit put spread, what do you think that is? That means you pay for that. So that means if I bought the $200 put and I sold the $100 put, the delta in that would be the debit. That's how much I would pay. So these are all credit spreads. And the reason I sell credit is because I don't know, something like 90% of options go unexercised, which means that the purchaser just loses the premium. So that's how I just collect income every week. The next position is Tesla 250 to 240 put credit spread. Again, it's expiring on 3/29. And with these positions, if you just take the delta between the two expiration prices, you get the maximum loss on these minus the credit that was collected. So right, 250 to 240 put credit spread expiring on Friday, 3/29. So the delta between those, I mean, the one that at 250 and the one at 240, the difference between that is $10. But this is based on 100 shares. So every option is based on 100 shares. So that times 10 is $1,000. That's the maximum amount I can lose in there. The maximum amount that I can win on that is just the premium collected. So say on that one, I think it's $144 that I collected on it. So that'd be $1.44 times 100, so $144. And that one actually have two positions open. So I have two puts I sold at the 250 and two puts I purchased at the 240. And why, you might say? Well, they just seem like really juicy premiums, and it would seem significantly below the market price at the time to open that position. Also, there was another reason that I did that one. Oh, I think the prices were increasing more relative to the other. So for some reason, right, you get into the psychology, and I'll probably do a series on this, on behavioral finance and the different the research, some of the research behind some of the psychological effects that's documented in terms of pricing. So for whatever reason, some people just like even numbers. So 250, 260, 270, 280 versus 240, 250 or 230, 250 or 270, 250, right? The 260 just sounds nicer. So sometimes you just have more liquidity in the even numbers. So if that was a concern for you, go with the even number. Obviously, profitability is number one for me. So you do you, but profitability is number one, and whether that's an even number or an odd number, it's just a factor you have to consider if it was going to increase your risk to the point where you might lose something. You obviously have to consider that. Now, the position that is losing money and that I wanted to actually spend some time talking about is the Tesla credit spread. This put credit spread, 270, 250 to 260, 250. So the maximum loss on that is the difference between those two exercise prices of $1,000. The total premium I collected on this is $300. So this actually was open 2 weeks ago. This is open the first week, and then I rolled it because well, first of all, I'll tell you what rolling is and then why I rolled it. Rolling is, you have an exercise price of say $322, which was last Friday, and then you, in one order, you would you'd buy back, right? If I sold the higher priced one, and if I sold this one and I purchased this one, and this is this Friday or this past Friday, right? I would buy this one back and sell this one. That would close this position, right? And then the following Friday, which is the 29th, which is this one, I would sell this and purchase this. So simultaneously, I do those together, and I roll that position. So I only tend to like rolling if I can collect additional premium. So, and I've never tried this before that I can remember when I was doing the test in the demo account, but I think tomorrow what I'm going to do. So let me just talk about this position. Okay, so I've collected $335 on this so far. My total risk is $1,000. So the difference between those is the maximum loss is 600 and change. So if I look at this, right, Tesla is currently trading at like 260 something, 268 I think it was, or something like that. And I would lose money if I open this right now. So I've collected 335. Market value is 450 right now, so I'm going to lose 175 bucks if I were to close out this position today at this moment. So you have a couple different things you can do, right? I could take this and close it out and just eat that money. I could wait till it gets closer to Friday when it expires and see what price action tells what happens with Tesla's stock price. Like maybe it jumps up. If it jumps up to say 275 or 273, right? 272 and 75 cents or something. Maybe I can close the position, right, and open up a different position, one that's further away from the money. Or what I might do, this is the one I'm actually leaning towards, is continue waiting, but potentially roll it to the beginning of April. I think that's expiration date of April 4th. Roll it to that weekend, which would mean I would close this position in the same exact order I'd open one for April 4th. So you close this Friday, right, the 329, and I'd open it this one, and there's two legs on each one of those. Legs is just the option that you purchase versus the one you sell. Each one of those is a leg. And roll it down on expiration prices, meaning, right, I have 272.50 to 262.50, so roll it down to 270, but instead of going to 260, right, which I probably won't be able to collect a premium on, maybe I'll go to 270, 257.50. And you're like, Sam, why would you do that to increase your risk? And somebody who would say that would clearly understand options. But what that I'm doing is I'm opening up the expirations, right? Because I go from a $10 spread between 262.50 and 272.50 to 270 to 257.50. So now I have a $12 spread. So that's a $1,250 potential loss, maximum loss, minus the premium collected. But what that would allow me to do is increase the probability, not necessarily. That would hopefully allow me to have intraday or something like that price movement of Tesla where they go up to 271, which, last week I think they were up at 270 something. I don't have that up right now, but I think it was about a week ago they were already up at 270. I'm just going to pull up their price. Yeah, 275. So, and within the last month I think they were up at 320. So I think that they're probably going to go up. I don't know when. They might go down further. I believe in the company, but I don't have any fucking idea what they're going to do in the short term, and it really doesn't matter that much. If tomorrow they drop, and it comes, okay, so it's trading at 268 right here. So if tomorrow they drop, that's fine. Like, I will just either roll the position or close it out as a loss. But I'm super curious to see where this journey brings me. On a tangent, if you've been following along, you know that I'm working towards creating a source of income or sources of income. There's 5 of them so far online that produce enough income that I need less than $100 a day, at least, so that I can do this full time, whether that's trading or videos or other stuff I do online. $100 a day online. So if this continues to work in my favor and I'm not losing money with options trading, as time goes on, I'm going to add more funds. And so maybe in another week or so, I'll add another $1,000. And then maybe a week or two after that, I'll add another $1,000 and continue building up my portfolio until, actually, I'm trying to think from a capital preservation standpoint. I have a 3-family house I'm trying to purchase. That will also bring in some more income. Which will definitely reduce the $1,000 a day, $100 a day, or add to it, right? If I can get $1,000 of cash flow on that one, then that's what, $30 a day, roughly $33 a day. So that means I only need $70 online, you know, and then I can reach that pretty quickly. Okay, so I will continue to keep you guys updated. That's my current position. I will show you it now, so that way, if there's any haters, okay. So there is the portfolio value. There is the positions I just mentioned to you. The SPY, the Tesla 244, 250, and 270, 250. If you guys have any questions about options or trading or creating a lifestyle online or just anything in general, say what's up down below in the comments or reach out to me on Instagram. The response might be slightly faster if you do it through Instagram because I tend to use that a little bit more. Hope you guys have an awesome fucking day, and I'll talk to you soon. Peace.